We have a busy week. MPC, we have inflation. We also have the rand trading down to 6.90 at its best this morning. And that's after hitting 7.23 last week, so quite a comeback.
Morning, Stephen. Yes, it seems that the rand is actually benefiting from a return of a risk-on sentiment. It's largely been driven by the fact that there's been some decisive action on the Libya situation. We've also seen the threat of nuclear meltdown in Japan recede quite significantly. So yesterday was a good day for global equities. It seems that some flavors returned to risky assets and the rand has strengthened almost across the board. So definitely benefiting from an improved global sentiment at this point. As you mentioned, it strengthened quite significantly 690. We think that that 690 level should provide some resistance. So it's currently trading just above that level. We don't see it breaking much below that in the short term.
We've also had the dollar weakening to above 142 against the euro. So could we also look at this as more of a dollar weakness story as that risk appetite grows?
Well, certainly dollar weakness has helped the situation, Stephen, but as I mentioned, the rand actually strengthened across the board. The dollar seems to just be drifting weaker, maybe just on the back of the higher oil price. There's an inverse relationship there, and the dollar oil price is still trading close to $114 a barrel. So definitely the dollar weakness has helped the rand, but it wouldn't be the entire story.
To what extent has that G7 intervention last week been successful? Because we did see the yen weakening initially with that news. There has been talk of more possible intervention, and that has seen the yen gaining ground against the dollar.
Yeah, Stephen, that's going to be an interesting story that's going to play out certainly over the next few weeks, maybe even months, because they're essentially two forces here. We have G7 countries trying to intervene to keep the yen weak and promote export-led growth in Japan. But there's also likely to be a counter surge from the repatriation of yens back into that country to help with the rebuilding effort. So certainly be interesting to see how those two forces counteract each other. Perhaps over the medium term we'll just see that rand stabilize in the 80 to 84 range.
We do have some local data this week which could influence the rand as well. We have the quarterly bulletin coming out today. What are you going to be looking for in that bulletin?
As far as we're concerned, Stephen, the most important data for the rand is certainly going to be what happened to the current account and trade balance. We already know the trade numbers. We saw very substantial surpluses recorded in November and December, above 8 billion rand surplus in both of those months. So as far as the trade account is concerned, we should have recorded quite a substantial surplus. And that effect combined with what we expect to have been a narrowing in the net services balance, and that mainly reflects payments made by South Africans to non-residents. In particular, it would contain dividend outflows. That balance should have narrowed in the fourth quarter. It's traditionally quite large in the third quarter. So the combination of that lower balance on the net services account, as well as a higher trade surplus, and added to that the acceleration of GDP growth in the fourth quarter, should have seen the current account as a percentage of GDP narrow quite significantly. It was 3% of GDP in quarter three. We'd be looking for something much lower in the order of 2.7%. So as far as the rand is concerned, that would be the most important set of data.
I'm sure the rand is also going to be a big factor under consideration when the MPC winds up its meeting on Thursday afternoon. And ahead of that, we also have inflation data for February coming out on Wednesday. What are you expecting over there? And it looks like consensus is that there's going to be no movement in interest rates and possibly no change in tone at this stage.
Certainly, Stephen, our base case scenario is that there'll be no change in rates. Might see a bit of the MPC make a bit more emphasis on the effect of the recent rise in oil prices and what that implies for inflation going forward. But as we've been saying, we believe that interest rates are going to remain flat for this year. So we also don't see it as a big event risk for the rand, particularly with the uncertainty that currently prevails on global markets. So it should all in all just be a fairly normal MPC with no surprises.